Hey everyone, welcome in to another daily editorial here on the KE Report. I'm recording a quick daily editorial as I'm heading back from the conference in Beaver Creek that Chad and I were at this week, meeting with a lot of companies, heading back to the airport to head back home. But I wanted to get a quick little market update here with Joel Elconin, co-host of the Benzinga PreMarket Prep Show, also editor of the PreMarket Prep website. Joel, there was a lot of kind of wild moves this week. We'll talk commodities broadly getting a bounce and looking to end the week strong. But I want to start with the broad markets. Wednesday was a very interesting day where I know from talking to you and a number of our other commentators that people are expecting some more weakness in these markets, whether it's seasonality or just considering how well markets have done through this year to date. But Wednesday, the Dow was down early in the day and then went through about 1,000-point reversal to end up and really just continue this momentum higher as we have the S&P also close to all-time highs. But Joel, what do you take away from action that we have seen in the Dow on a day like Wednesday, where as much as it seemed like it wanted to go lower, it just didn't happen?
Good afternoon, Corey. Thanks for having me. I guess fasten your seatbelt for this seasonality here. You mentioned that move on Wednesday, the 130-point intraday reversal on the S&P 500 index futures. Do not think I've ever seen that with the VIX at such a low level. Caught a lot of people off guard. I feel a little bit remiss that I did not pay attention enough to the seasonality of the rollover of the futures contracts at the S&P and the S&P 500. That's when you switch over. People have to switch their December positions to the December contract. That takes place on the Wednesday before expiration. You all know what happened. So people are always trying to attribute moves in the markets to Jensen Huang saying something about AI. But to me, a lot of times I point to liquidity or lack of liquidity, and that was a rollover to remember. So, folks, just keep your heads up for your quad witch expiration next Friday.
So, Joel, big picture for traders then. That drop that we saw to start this month, is it over? Are we back in a bullish mode for markets?
You know, we've talked about V bottoms in the past. And it seems like you get a V bottom. I mean, that just seems you got to be out there on days like that. If you were hoping for a back and fill, I can even think about Tuesday. You know, the price action on Friday, the futures jacked up on Tuesday. I'm like, yeah, wait and see. You know, let this puppy come in a little bit. Let this make a double bottom. Well, that didn't happen on Tuesday, but on Wednesday you did get perilously low to Friday's low. I know it's a long time ago. So just once again, your V bottoms, algorithms, once they start selling, they continue to sell. Once they start buying, they continue to buy. Right now, the stage is set here going into the quad witch expiration. I'm not really focused on the old-time high that much. When I'm focused is on, I mean, there must be almost over a half a dozen highs. Just mark this if you're S&P centric, the 5670 area. That was the congestion that you had in late August. Little bit, a couple days into September before you just fell off a cliff. So getting all the gains back, one bad week, 5 straight down days, the bulls come roaring back, 4 straight up days. I don't see how you can stand in the momentum of this market. The only two things I'd be cautious of is one, if they do have a hike a half a point next week, the mantra is going to be, oh, what do they know that we don't know? The economy may be coming to a crashing halt. Right now, a quarter rate is factored in. But right now, during these expiration moves over the years, yes, they're major turning points. But, you know, you just got to respect the upward momentum in the market. And maybe you don't have to chase it, but certainly don't stand in front of it.
Back to that bullish market. Hey, Joel, what about tech? Do you see tech as leadership here? Or tech, look, NASDAQ's not close to all-time highs, but it also has bounced. So any tech leadership?
I mean, you could just go to the big dog there, Nvidia, right? Got, its earnings report, which was, a good earnings report. Maybe they didn't up his guidance as much. That got into a pretty oversold condition. I don't know if you pay attention to relative strength, though. On Wednesday, that stock opened higher. barely went red on the session. And if you consider the performance to what the S&P did that day, it was a hell of a relative performance. Apple, very newsworthy. Phone, no, whatever. Ireland, EU, fine, which we've known about for a long time. That stock has exhibited excellent relative strength compared to Microsoft, that's within 10 points, 12 points of its all-time high. Microsoft a little bit more tame. The interesting thing about Google here, if you Google investors, is you did breach the August low, which is hard to believe, but you put in a nice triple bottom under 150. Google's on the rebound. Meta today got hit off a little bit off the China news. Once again, buy the dip prevails in that. So I think tech kind of, led us, in this market. It kind of lagged on that recent rally, but definitely has some legs. So that's where the money's been going. And I think if you're still trying to look for the rotation in the IWM, I haven't checked to see how that's doing today. I mean, the leaders are IWM's a 5. Leaders are the leaders, laggards are the laggards. Tech still seems to be the place to be.
All right, Joel, let's move over to commodities because boy, oh boy, they are ending strong. Gold is back to all-time highs. Silver's playing catch-up. Silver's up almost 10% this week, and really that's just in the last couple days of trading. Oil bounced right off that $65 level. Copper bounced off $4. It's up almost 4% this week. What's your takeaway from commodities broadly really leading this rally?
I mean, I need to go back to school. I mean, I thought that, gold and silver were supposed to flourish in periods of rampant inflation where we had the inflation. But now with the tenor of interest rates coming down, they're switching to to silver and gold. Oh, you guys have heard me on here for years. I've kept my core position. I've never have deviated from it. Sticking with it. Silver, I think, if you're the IWM and silver's the IWM of the commodities market, so that has room on the upside. Not sure what's going to upset the apple cart with this gold rally. Of course, see what the Fed has to say next week. Commodities, I mean, overall, they gave us a little bit of reprieve in the inflation data. Copper catching a little bit of the bid. Just overall, with respect to commodities and inflation, you got to be careful. I mean, we are getting some good numbers here, but a lot of them are, year over year comparisons. And the farther you go into the months, in the remainder of the year, those comparisons, year over year comparisons, are going to get tougher. But right now, commodities have been hit on the rebound. I'm looking at like sugar. I mean, they don't tell you inflation is going to kick us in the face, but you never know. You never know what we'll get in next month's inflation data. But so far, the Fed looks like it's really playing things well.
Yeah, well, the charts for the metals too I find so different. Gold, look, that almost could be a momentum play, you can argue, because it just keeps hitting all-time highs. Silver, it's nowhere near all-time highs. Nowhere, it's off its highs from earlier this year. But what do you see in these charts then? Is gold simply that momentum play?
Yeah, I think so. Yep, I do. I mean, like I said, unclear on the fundamentals. It's just, a safe haven. I mean, Bitcoin has been acting squirrely lately. A lot of money went into Bitcoin, perhaps based on, what the outcomes of the elections or whatever. I don't know. Trump has talked about, a big Bitcoin stake. I don't know what the status of the elections is going to be. It can rotation, and perhaps some of the crypto people are reallocating to the gold markets. Once again, algorithms don't care what the fundamentals are. They buy when they need to buy. Gold had that clean breakout yesterday over the 2660 level, 2670 level. Boom, here you are, bunching up on over 2600 as we speak. Silver down earlier in the week, just above 28. That catches a bid. Had that that psychological $30 level. So, a lot going. It's not as widely followed as the gold market, but the momentum usually shifts over. So, a lot of different ways it plays the commodity markets, but the catch-up trade in silver, I'd love to see it materialize, but we just have to bide our time.
What about oil then? I need to ask you because boy, oh boy, oil dropped right down to that 65 level, which is close to a breakdown level. Is there a trade here?
Boy, well, the trade was focusing on the double bottom there. I think that's what you got to do when you look at the crude oil market. I mean, when it gets to these areas, you had a pair of lows right around the 65.50 area. China concerns, U.S. concerns going into a recession. This $70 level, now I know we traded above it today, 70.32. I think for you bulls in the crude oil market, you need to make a sustained bid over $70 and hold $70. But man, it's just wicked. It's volatility. It flows with news. There was also talks about OPEC, just opening up the spigots, which in my opinion, they're doing anyways. Concerns about the economy. Well, we've been told we're going into recession now for over 2.5 years. That doesn't happen. The other fundamental thing, I don't know if you're a bull, a bear, or whatever on, EVs. If we're going to make that generational switch to EVs, that's definitely going to have an impact in the demand for crude oil, and you have to keep an eye on that moving forward.
All right, Joe, one final point to get to. Let's talk Oracle at earnings this week, and then all of a sudden almost completely change the outlook moving forward in the next couple of years. Recap this week for Oracle.
I'll just give a tip to the investors, and I don't know if y'all had a chance to listen to the top of the pre-market prep show today, but my co-host got caught in that. And it was an investor's day. It was comments at an investor's day 3 days after earnings. I mean, come on. They didn't have this information 3 days ago, right? So Algo's picking up. They're raising their revenue, I think, by $1 billion. Now they're trying to add, who much knows how much they added in market cap. That ended up opening up right near the highs for the session. The only thing I'd say is pay attention to Investors Day, because boom, man, it got a pop, opened 73.70, boom, hit 73.93, and now you're only up $2 at 163. So they're selling in the strength in that. You're not going to get another pop like that in Oracle. So if you think that, you had a target at 170, well, you better readjust that target, because you're not going to get that kind of unexpected news again. And, if you're a short-term trader, swing trader, day trader, or even a long-term investor, pay attention to those investor days, because those comments, what moved the market. Also, they were going out to 2029. Who the hell knows what's going to happen in 2029? Who knows? Who am I going to be alive in 2029? So, I mean, pretty bold statements by the company. A reaction to the market. Now, when all the dust is settling here, that stock, to me, a lot of people looking at it up $1.95. I look at it down $10 on the session from the open.
Well, Joe, I hope you're still alive in 29. I hope we're still chatting in 29. So hang in there, okay, buddy? But yeah, those forecasts, man, oh man, that's almost just more for marketing than anything. Joel, great chatting with you. Thanks for taking time on this Friday as I'm heading back from the conference. Everyone, thanks for tuning in to this Friday Daily Editorial. We'll be back with you with the weekend show and daily editorials all next week. Have a great weekend, Joel.